welcome my mortgage broker. This is like Mud and Jeff, what they say, two peas in a pod. We definitely try to help people. We understand that everybody credit profile does not look the same. And so we put forth our best efforts to help everybody. So without further ado, introducing Reginald Masters. Good morning, Reginald. Can't hear you.
Good morning. Thanks for the introduction. Can you hear me now?
I can hear you.
Okay, great. Hey, I'm glad to be on this webinar and everything, and I hope everybody is enjoying their new year so far. It's gonna be a great year for everybody. So
it is.
I'm claiming that.
Yes, it is. I'm looking forward. I'm excited to everything, that's happening this year. Clients have questions. At first, everybody thought the real estate market was gonna collapse. They were like, "Oh, I'll wait to buy a house because the prices are gonna go down." And not gonna happen.
Right.
So what are you hearing on your end about just the mortgage industry?
Yeah, so I don't believe there's gonna be like a repeat of 2007, 2008, anything like that. But I will say that inflation is affecting, I believe, almost every industry, and it is affecting us too as well. From a standpoint of interest rates, I know everybody's been talking about interest rates and things like that as of late, because there's been talk in the industry that rates are going to go up in 2022. So that's what everybody's been saying. I mean, nobody really knows, but the thought is that rates are going to go up to put inflation in check, quite frankly. So as rates go up, it's going to suppress, the appreciation of homes. So, all this appreciation that we're getting, with higher interest rates, you can afford less of a home, right? Because your payment will be higher. So that's really what it's probably going to be designed to do. I've read a few articles where the Fed is going to increase interest rates at least 3 times next year, or this year is 2022 now. This year. So whenever the Fed increases the rate, is not really necessarily the mortgage rate, but it does impact the mortgage rate, which if it goes up, is obviously going to go up because the cost of money is higher.
Yeah.
So with that said, if you need to refinance or anything like that, you need to go ahead and do it now, early on in the year. All right. If you're looking to purchase, you need to get off the fence. If you're able to purchase, you need to go ahead and purchase, because what's going to happen is we don't think that we don't actually think that the values are going to go down. We just think the appreciation rate of increase is just going to slow down.
Yes.
So homes are going to still be probably, and this is an educated guess or professional guess, I would say. We don't believe that the values are going to go down in 2022 or anytime soon, quite frankly. But interest rates may go up, which you'll be able to afford less of a home. So get off the fence. Let us get you pre-approved. Let Trish, find you a home. So we need to get this done sooner rather than later, because we want you to be able to get what you want to get and not have to settle for something that you don't really like. So, so just keep that in mind. As rates go up, I've already seen them go up. I mean, I've been pricing loans over the last week, and I've been seeing them go up. I mean, I priced an FHA loan last night. It was in the 3s, and it was at a 650 score. It was at 3s at par, meaning it doesn't cost anything to get that rate. Like, you don't have to buy it down or anything. So just keep that in mind there. Now,
and just to let the buyers in on a little secret, right now, between really December and I'll say March, find a home. Because once the spring selling season begins, which is usually in April, it is like the Hunger Games of real estate. So what I have seen, I've had other realtors call me, Trish, buyers financing fell through. Do you have any buyers? I see homes coming back on the market because financing fell through. So I need you buyers. I need you to trust this process and be diligent. I am sending out the same homes, especially for my buyers that I have now. I get your emails too. I don't just send them to you and never look at them. I'm looking at them too. So if you see a home right now between January and March, the competition is not as stiff. I need you guys to go ahead and nail down these homes, because especially for my folks that's been looking for over 9 months. Yes, we have people that have been looking for that long. The prices are going up. The average cost for a 3-bedroom, 2-bathroom home, depending on the area, is upward of $300 to $350 plus. I've even seen some that were $350,000, y'all. So I need you to jump on it. Look fervently. I'm sending you the updates. If you ride past something, send me the address. I'm more than happy to assist you. But as Reginald said, when we get into the spring season, which is traditionally the selling season, it is going to be the Hunger Games once again. So right now, while everybody is trying to get prepared, their New Year's resolution was to purchase a home. They may be waiting on their tax income refund for down payment and all of that. If you have been looking and you've already been pre-approved, right now is going to be your best bet, because when spring comes, appraisal gaps, additional earnest money, you have people who are literally draining their 401k. So I need you, if you can get pre-approved today, to go ahead and start this process so that you can get a head start on this market.
Right.
That's original.
Yeah, and just to kind of piggyback on what she said, the different kind of loan programs, that you want to look at is really, FHA, VA, conventional. I don't think we do too much USDA, but you want to look at basically the conventional FHA and VAs are going to be really your more traditional mortgages. Now, in this market, though, sellers like to accept conventional offers. So if you can get approved for conventional, there you go. Yeah, right. So I always like to tell people always ask this question: is it a good time to buy a house right now? I say it is if you're ready to buy a house, if you're financially ready to buy a house, because you got to think about it. 10 years ago, where were rents? Where were mortgages? Where were the price of homes? So you got to think now, okay, 10 years from now, where is rent going to be? Where is, the price of homes going to be? It's not going to look like how it is now. So it's better to do it now versus to wait. But like I said, in terms of loan programs, we want to really try to get you in a conventional first. We have a conventional first policy here now with this type of market. And then we look at the FHAs, VA. I mean, we always try to, if it's a veteran, we're going to look at VA first. Yeah. But for the most part, we still want to try to look at conventional, because that's the best way to get your offer accepted. Some of the other things, as far as for entrepreneurs, we have like bank statement programs, 1099 programs. We even have a program if you're going to put 20% down. It's like a no income program. So we do have those non-traditional type mortgages. They call them non-qualified mortgages because they're not going to the GSEs like Fannie Mae, Freddie Mac, stuff like that. I don't want to get too far into that, but we do have those kind of one-off type of loans to help a self-employed or a person with a non-traditional situation get into a loan. And then a lot of people always ask about down payment assistance. So down payment assistance, we do have down payment assistance, and we're willing to do down payment assistance for you so you can get the 100% financing. But like I told you earlier, rates are going up. Generally, down payment assistance programs have higher rates already over traditional mortgages, most of them. So you got to look at it like, okay, if I have a 401k over here or something, or if I can get a gift from a parent or a relative, would it be better to do that versus get down payment assistance? So, I don't want to make that decision for you, but you have to look at it that way sometimes, because down payment assistance programs can be difficult at times. Sometimes you can't close them as quick, and it doesn't look as attractive to a seller whenever Trish is putting in an offer. So you have to keep those things in mind. So you may have to sit on the sidelines a little longer if you're using down payment assistance. Mm-hmm. So I just want to touch on those things. I told Trish I wasn't going to be too long-winded. I'll take some questions, or if you have any questions that you want me to address, Trish, I can do that. But you just let me know.
I have this too. I try to help our buyers with this information right here. The do's and don'ts of when they have applied for a mortgage. And I'm going to take your information off briefly so that they can get the full essence of this. But this is the thing, that we run into when we are having buyers that are getting pre-qualified for loans. And we kind of run into these things about once you have applied for a mortgage loan, I put together the 10 commandments. So part of when I do my buyer consultation to help you guys out, because we see so much stuff in this industry. Just talk a little bit about the do nots when it comes to when you have applied for a mortgage. And we can start with number 1. Do not change jobs, become self-employed, or quit your job.
Right. And the reason why you don't want to do that is because it really changes your income. Now, changing jobs to become self-employed, and if you've never been self-employed, that's a real deal killer right there. So keep your job until you get in a house. Keep your W-2 job until you get in the house. Once you get in the house, then you can look at becoming self-employed, or just start the self-employment on the side and kind of get it going, but keep your job. That's what you want to do. Now, in terms of changing jobs, it really just depends. Like if you're going to change jobs to make more money, that is not necessarily a bad thing. That can be actually a good thing, but it's best to talk to the lender about it and see how it's going to affect it. Because, for example, if you're under contract and you're getting paid hourly, then we may have to have 30 days of pay stubs, and then that's going to push your closing back. So you got to make sure, you talk to your lender and see how it's going to actually affect you. Now, if it's a salary job, sometimes that can be okay, because especially if you're making more money and it's salary, the income calculation for us is not hard. We can use the salary amount, but when it's hourly is when it kind of becomes a little tricky. So
number 2, thou shalt not buy a car, truck, or van, or you might have to live in it.
Right. Yeah. So if you the thing is you don't want to get no new credit, quite frankly. But buying a car or a truck or something like that is really going to hurt your debt to income ratio. So again, you want to talk to your lender before you do anything in terms of adding new debt. But most of the time, this is a very bad idea to do this. So do not go buy a car. I think I made a post one time, buy the house before you buy the car. That's like law right there. So, buy the house before you buy the car. So
Number 3, thou shalt not use credit cards or charge cards excessively or let your accounts fall behind.
Right. And you don't want to do this because if your credit report expires, we have to rerun your credit. And if your payment on your credit card is higher, well, voila, you have a higher debt to income ratio now. Even though sometimes we can fix things like that by paying it down, but it makes it a little bit more difficult, and you want a smooth process doing it. This is a big purchase. This is a stressful process. So you want to try to make it as least stressful as possible. So don't go buy nothing excessive. Don't go buy the furniture yet until you actually get in the house, until you actually close, then go buy the furniture.
And I tell people, because they say they start getting advertisements for rooms to go, and I don't know if the companies are selling the information, but I'm like, hey, you're not going to have a room to go to if you go and buy that furniture and you get that credit card. Or they'll go to Brand Smart and they're ready to get the Brand Smart credit card. I'm like, no, do not do that. Be smart.
Right. When your loan is in closing, they run another soft pull on you, whether you know
Yes,
that or not. And if any new debt comes up, you have to explain it. We have to add it in the debt to income ratio. So even though it looks like they're not running your credit anymore, it is being run on soft pulls kind of throughout the process. So
yes. And I told them especially that 10-day period before closing, that
yeah.
that's like I call it hell week, you know.
Right, right.
Gotta make sure, you know, if you done something new, is you got some explaining to do, y'all. So,
Right.
you know, that's why we're going through this so that you know, and we know that we
Yeah.
told you. Thou should not spend money you have set aside for closing. Let's talk about that one.
Yeah, please do not do that. And especially like in a rising interest rate environment, we may send you a pre-approval letter with 3.2. Let's just say we send a pre-approval letter with a 3% interest rate, right? And you really need that 3% interest rate to qualify for the house. If your rate goes up, then you don't qualify because you're at the top of your budget, right? So we got to keep you at a 3% interest rate, but it may cost you, right? So your closing costs may go up. So if you don't have the money to close, and sometimes you have to have reserves for it to even be approved, then you just shot yourself in the foot. So try to be as frugal as possible when you're going through this process. You got to put food on the table and everything like that. But we need those balances to stay around the same pretty closely, until you close the loan.
Absolutely. Number 5, thou shalt not omit debts or liabilities from your loan application. Let's talk about it.
Right. So, you might have somebody that can clean up credit, right? Or they can do something where credit doesn't show up on your credit report. Well, trust me, these banks have ways of finding out. They have things like fraud reports and LexisNexis and things like that where they can pull stuff that doesn't necessarily show on your credit. If you had maybe like a foreclosure or something in another state, some states don't report it, immediately and things like that. So, those things show up even if you get it off your credit report. So you just need to be careful of that. If it's something, come forward with the lender because we don't want you to get so far down the process, you're past the financing contingency period, you're past the due diligence period, and now the seller gets to keep your earnest money because we can't get the loan done.
That's correct. And you can't get upset with myself or Reginald if you lose your earnest money because you omitted a debt or liability from your mortgage application, y'all. I want to make that completely clear because in 13 years I have not lost anybody's earnest money. But that's because we use the honor system and we tell the truth. Listen, it's things that you're going to talk to Reginald about that you are not going to talk to me about because here's why. He has a disclosure. So certain financial things, listen, Trish don't even want to know. I want you to tell Reginald.
Right.
Because he's going to tell you what to do. If you say, well, Trish, I got a little issue with something, my question, my answer is that's a Reginald question.
Right.
You're going to hear me say that often if you work with us. You can't certain questions about the contract and inspections and the house and blah, blah, blah. But when it comes to financing, I'm going to tell you that is a Reginald question. So he's not going to disclose anything to me unless you give him permission. So understand that we work together. We have 2 separate positions, but we work together. But you, please talk to him. Please talk to your lender. Even if you don't use Reginald, talk to them because what you don't want to come back to is that potential mortgage fraud. So we use the honor system, Scouts honor. We want to make sure that we are telling the truth so that way we can help him help you. We already touched on thou should not buy furniture, but go ahead, Reginald. I'm sorry.
No, that's okay. I want people to be comfortable enough to come to me and be like, hey, this is truly what the situation is. Now let me know what I need to do. I mean, I'm not gonna do nothing illegal or nothing like that. But I do want to know what's really kind of going on because until the file is actually in the underwriter's hand, then I'm not gonna, I'm not trying to I want to make sure that I put you in a good situation. Let me just say that. So I want you to be totally truthful on everything you're trying to do so I can let you know what the rules truly are so you can make an informed decision based on that.
Absolutely. We do have a question
Mhm.
from YouTube. What if you had to buy a car? Can you still apply for a mortgage several months later?
You can, but again, it's going to affect your debt to income ratio. I get it. You know, if you have to get back and forth to work, you had somebody totaled out your car, you had the car paid for, and you have to get a car. I get it. You may have to like just talk to me first and see kind of what the numbers would be if you were to get the car, because you know, if you're gonna purchase within 30 to 60 days, you might can borrow your mom's other car or something. You know what I mean? So we just have to kind of talk through the situation. Every situation is gonna be different. You may have enough to absorb a car payment. I don't really know that yet until I see your situation. It's just those situations to where you already have a high debt to income ratio where that'll be a real problem. So it's best to let us kind of see what it would be, and then we can go from there. So everybody's situation is going to be kind of different.
Absolutely. That's good stuff. I just replied back to you, Crystal. Thank you so much for your question. As we kind of dig through, these 10 commandments when applying for a mortgage loan. We talked about furniture already, don't rooms to go, American Signature, do not do it until
Right.
after your closing. Number 7, thou shalt not originate any new inquiries into your credit.
Right. So again, like once you get pre-approved, once you have your lender picked out, right, you don't want to go get your credit run again because you have to explain every inquiry on your credit. It's not something that'll necessarily kill your deal, but it can't hurt it, depending on what you do. But you don't want to get new inquiries and everything like that, because what's going to happen is, it's just going to be more paperwork for you and for me and for everybody. So
absolutely. Number 8, thou shalt not make any cash deposits into your bank account.
Right. So this is huge right here, and this is something that I always try to tell people up front. I mean, I know it's your money. I know you can do what you want to do, but you have to listen to us so that you won't have a headache at the end of the process. So generally, for example, for like on an FHA loan, whenever you deposit over 1% of whatever the home value is, then you have to source that deposit. And if it's cash, you can't use cash as a source deposit. So we have to back that out of your assets. So you may have enough to close, numbers wise, but we can't use it in qualifying. So a lot of times what we have to do is we have to get that money, if it's cash, we have to get that money into your bank account in an acceptable way. And I could talk about that for an hour, right? So for different situations. But what you need to do is you need to call me so we can talk about how to get it in your account without it being a problem for getting the loan done. So that is huge. Do not deposit cash. Another thing is don't go get a loan to put into your account too as well. That is a problem too as well. So you can't use borrowed money for a loan to get a mortgage. The only way you can do that is if it's like you borrowing against the 401k, borrowing against a financial asset. That's the only way you can truly really do that. So those are questions that for your particular situation, you want to talk to the lender about it before you go do it. Don't do it and then talk to the lender. Talk to the lender and then let them advise you on how to do it.
Yes. Number 9, And I've seen this happen often. People get into an uproar with their bank. I've been with them for 50 years and they done made me mad. So I'm going to close my account and I'm going to go open a new bank account. No, ma'am, and no, sir. Please, not in the middle, because one of the components that you have to send your mortgage broker, whether it's Reginald or somebody else, are your bank statements.
Right, right. And again, and it goes back to what we just said just a minute ago, right? Mm-hmm. Say, for instance, you get mad at Wells Fargo and want to go open up something at Navy Federal. Mm-hmm. You take out all the cash at Wells Fargo, you take out cash and go deposit cash at Navy Federal. Well, now we have a problem, right? Yes. So it's best to, it's best to just keep the bank until you close, because we generally have to have 2 bank statements anyway. And they want to see where the funds are coming from and all of that. So if you close it, you can't even get the information no more. So yeah, just don't make any financial moves until after you close.
Yes. And number 10, having a young adult myself, I can understand how your heart may go on and out to, someone that you love and they want you to co-sign for a loan. But ma'am and sir, please do not do it when you are trying to purchase a home. Tell little Junior and little Boo Boo, they gonna have to wait until after you purchase this house. You cannot co-sign.
Yeah,
Reginald.
Please don't co-sign, and please know who you are co-signing for. Just from a life perspective, because your credit is just as important as your health and things. It's not as important. Let me not say that, but it's up there. You know what I mean? So co-signing is gonna hurt your debt to income ratio, especially if it's not 12 months and they've been paying it for 12 months. We have to still use it in your debt to income ratio and things like that. So yeah, just be smart about that. Do not co-sign for anybody. Do not make any financial moves. All right. Don't make any financial moves once you get pre-approved. Just stand still for a second until you get your home closed.
That is correct. And if you guys want a copy of this, I'm going to put this up on the screen, put our email address up. It is info@TrishSellsATL.com. info@TrishSellsATL.com. I'm more than happy to send you guys a copy of this so that you have it in writing. I do provide this to my buyers, just as a good rule of thumb, because, working together, if it's something that, Reginald may miss or I may miss, this is one of the things that keeps us accountable, to the industry, to one another, and to our clients, because it's easy for folks to kind of say, well, I didn't know and all of this. No, we telling y'all right now. Mm-hmm. That you cannot do some of these things. And so if you all have any questions for Reginald, you want to pick his brain, you have any questions for me, now will be the time for you to put them. Instagram, you can put it in the comment section. Facebook, YouTube, please place it in the comment section so that we can answer your questions about, whatever real estate related. If you want to ask Reginald's he's a veteran in the industry, y'all. He went from underwriting loan process and now he's a broker. So that wealth of information is vital. I call him sometimes because, I don't know. I get confused. People call me and say, well, Trish, what if such and such happened? I'm like, call Reginald, because that's a Reginald question. If y'all have any comments, questions, place them in the comments. I can see them. I have the comment section up now. Crystal asked one question about the slow months of real estate for looking for a house. So this market hasn't been slow by any means. I went on vacation on December 23rd, and I came back in the office on January 5th. But prior to that, I had not taken a vacation for almost 2 years. And when COVID first started, we had to kind of double down. We had to figure out what was going on. And so everything went completely virtual. We had to kind of restructure all of that. Then the showings, trying to stay 6 feet apart and safe with masks and all of that, was another dynamic. So I had literally been working through an entire pandemic and had not taken any time off. And so right now, inventory, we had team meeting on Monday. Last Tuesday. And while inventory, we're thinking it's gonna pop on the market about January 15th. As I told you before, my clients, when I send them properties, I receive the email as well. I'm seeing properties hit the market back to back to back. So the inventory is coming, and I would advise, because I have been seeing back on the markets. I have been seeing buyer financing fall through and been getting those emails and those calls, that you all jump on this thing. Now, if you can get pre-approved, I have Reginald's information on the screen. You got his number and you got his email address. I can send, as a matter of fact, I'm going to put in the chat the link to his mortgage application. So that way, if you want to get started on this thing, you can go ahead and get started and get a head start, because traditionally our season is it starts in April. And so once that hits, you're going to have to compete with every single buyer that, one, like I told you, once I think IRS is accepting the income tax returns at the end of the month. And so once that money starts coming out, they're going to want to purchase homes. And so your best bet is to make sure that you go ahead and do this process now. If you have money in the bank, if you have access to your 401k, go ahead and purchase your home now prior to March, because after that, it is going to be the Hunger Games of real estate, y'all. And I'm just saying that. I'm being very honest with you guys when I say that. The link is also on the screen for Reginald's application if you want to jot it down, if you want to screenshot it, and all of that stuff is on the screen. But it is the Hunger Games, so now is the time. Do you know where the rates are right now as of today, Reginald?
Yeah, so the rates, depending on the occupancy, and when I say occupancy, I mean primary residence, second home, investment property. Also, depending on, the type of program, conventional FHA, VA, or some kind of bank statement program, they can range anywhere from and then it also depends on the term too. Like 15-year fix is going to be under it's going to be in the twos, right? Maybe even low twos, below 2.5%. Then once you start going into the 20-year to the 30-year fix, you may be looking at a range between the high twos if you have really good scores to to the bank statement stuff that could go in the fives, right? Fives to sixes. So it's really depending on your situation, what you're trying to do, the term. So it's kind of really hard to really say that, to kind of, give, just one rate to what many possibilities could be. So.
Got it. So let's see what else we had on here in the comments. And I had another question from Kia, but I think it was more a related question. She asked this question. She was asking about, she said, in this market, it's incredibly difficult to negotiate because of the demand and lack of supply. She was talking about repairs, such as possible mold removal when putting in an offer on a home. And I conveyed to her, because I understand that some repairs are required by the bank. So you're not going to be able to get your loan approved unless the seller completes these repairs. But I basically let her know, yes, there is like a lack of inventory, but that's why I am expressing right now, when you see something come on the market and you like it, jump on it. On it, because as soon as it hits, within 24 hours, you're talking about, if they have 30, now they're not even doing 30-minute increment showings. They're doing like 10-minute increment showings so that they can maximize the time. So let's say somebody showed a house for 8 hours and they did 10-minute increments. That's 80 showings, y'all. So those 80 showings are going to bring at least 50 offers. Okay. And so that's why you want to jump on it as quickly as you can and be serious about it. And unfortunately, in this market, it is a seller's market. So they aren't doing a lot of repairs. You know, and I'm not saying that they are not, but typically, if they know that it's a bank required repair, their agent is smart enough to tell them, hey, if it's bank required, get it done. But if you're asking for like cosmetic stuff, so to answer her question, if the bank doesn't require the mold remediation, then the seller may not do it. You know, sometimes sellers have done it in the past just in good faith, but it's like, am I required to do it? That's why you see a lot of homes as is. So that's when you have to make a decision to say, well, this is something that I know I need to pay for out of my pocket. That's something that can be done. Or if the seller says, well, you know what, I'll do it, but I'll do it post-closing. You know, to make sure we're going to close on it. That's something that's admissible too. But help them understand a little bit about with the repairs, the mandatory repairs from the lender, how that works.
Right. And this goes back to why I said that we want to try to go for a conventional offer first anyway. Because conventional is going to be a little bit more lenient on the type of repairs that need to be made.
Yes,
now,
sir.
Once you know, if you go with FHA or VA, there, you know, those repairs have to be done. Yes. Certain things, it's going to be a little bit more stringent when you have the government type programs like that.
Right.
So that's why sellers would like for you to have a conventional offer. Not only that, we can usually get conventional done a little quicker too anyway. Yep. Reason being is because many more appraisers can do conventional appraisals versus FHA appraisals. Woo. And VA appraisals. So we can get an appraisal a little bit more quicker, all right, with conventional. All right. So you have the fact that, you know, the appraisal items aren't going to be as stringent as, you know, like the government loans, FHA and VA and stuff like that. And you know, just multiple things. You can get it done quicker, appraisals and stuff like that. So you know, that's why we want to try to go with the conventional. Now the bank is gonna require, if the appraisal comes back subject to completion or subject to repairs, those have to be done in order for you to close. The only way to get around that is if we flip it to a renovation loan, if you qualify for a renovation loan, and then you can get them done with a renovation loan. Now you have to do at least $5,000 plus worth of repairs to do a renovation loan. Sometimes you can do what they call an escrow holdback if the repairs are less than $5,000. I've done that sometimes too before. Okay. So say for instance, there's some little things that need to be done, and what they put on the appraisal is a cost to cure, right? So the appraiser is going to say, okay, it's going to cost an estimated $2,500 to get this cured. All right. Either you, the seller, or somebody can put the money in escrow, have someone, you can still close on time, have a contractor go out and fix it, and then we have to get an inspection, and then we can go ahead and, you know, close out the loan in post-closing, what they call post-closing. So there's ways to do it. It just makes it a little bit more difficult to do that. And we generally, you know, don't have to really do that as much on a conventional loan because some of those things are going to be required to be fixed.
Absolutely. And that's a good, you know, those are good options because sometimes people are just like, okay, I want this house, but what are my options? And so that's something that is vital that, you know, people know, especially with the conventional and the FHA. It's tough. And we work with investors when we see the going get tough. You know, we have, you know, other investors that we work with that can get you to the closing table, but it comes with a cost. And so, you know, we have to make sure that as the people representing you, that you can sustain it. One of the programs that I work with is Ribbon. And if you have an FHA loan, you cannot immediately buy that house back from Ribbon. You got to wait 91 days. And so, you know, it's a lot of moving parts when it comes to this because we understand that everybody can't get approved for conventional. And so that's why we just have other things in place to help and assist you guys. with that. I have Reginald's information. I put it in the comment section. And I'm in the comment section on both YouTube and Facebook. Reginald, if you want to give your information out for Instagram.
Yeah, so it's just basically my name at Reginald Masters. That's my Instagram. Or the company one is at Masters Home Mortgage. I'm gonna be honest with you. I don't be on Instagram and stuff that much. And what I've noticed is if you send me a message, if I'm not your friend, it goes into some like little black hole unless I just actually go in there. So if you send me a message and I don't respond in a day, it's not that I'm ignoring you. It's just that I probably hadn't went in there and looked to see if I had any hidden messages. I don't know why they do that.
The best method of contact. I have it too. They have like 3 different boxes now, and I'm like, oh my goodness, I didn't even know this was gonna be. But what would be the best point of contact for you?
Yeah, the best way to contact me is call me or email me.
Okay.
I accept text messages, but I got to tell you, I get so many text messages, and I try not to read it if I'm not ready to really kind of respond to it. Yep. Because once I mark off of it, I don't see it no more, and my messages are like just full. So I have to go, especially like if it's like one of those group messages, I'm really not gonna be able to find it. So the best way is really to email me. If you email me, then I know I'm gonna get back to you because I can keep it marked unread until I actually get back to you. But that's probably the best way. Either call, email. You can text me, but if you have to follow up with me, I won't think that you're bugging me. You just have to follow up with me on the text sometimes. So.
Well, thank you so much for that. I have YouTube and Facebook and Instagram in a moment. I do have Reginald's information up on the screen. His email is Reginald, his first name, at mhmteam.com. Reginald at mhmteam.com. Let me make sure we have clear all of our comments, all of our questions. I think we have. I think we have clear all of them. And if we have all hearts and minds clear, I don't see anything on Instagram. Thank you so much, Reginald, for always bringing such value to this webinar. It's something that I do every year. It's posted on YouTube. I send it around on different platforms. This will be uploaded to the podcast, y'all. We do have a podcast now that, we have listeners and subscribers that actually go back and they listen to this information. So I want to also say your telephone number for those who are on the podcast. If you need to give Reginald a call, his number is 470-433-0702, 470-433-0702 if you need to contact him. But thank you so much for being of such great value to Trish Sells Atlanta, and we just look forward to continuing to be, partners, in real estate as we continue to just help people. That's our main goal. Right. One of the things when I am speaking with lenders is that they understand that people that come to me, they don't always have a stellar credit score. They need guidance. And right. So I'm thankful, to be in partnership with you and in business with you to help people who, they may not in the beginning could have purchased a house, but we got them to the finish line. And that is what this is all about. So thank you so much for taking the time out on a Saturday morning to chat with us, bring your wealth of knowledge, and I'm sure you will have some questions and have people calling you from this. I'm going to chop it up on YouTube and all that good stuff so we can get all the information out and put you on TikTok. So,
that'll be a new one. Well, I really appreciate it, Trish. I appreciate you and your partnership too as well. I mean, you have been very valuable to me and our business too as well. So I really appreciate you. I love this industry. I love being in partnership with you and helping these families get into homes and just, us doing our assignment from God. So I really appreciate it.
There it is. I appreciate you, and we'll be chatting because I'm sure I have a question in the next day. So you hang in there. Happy Saturday.
All right. Same to you. Have a good one, everybody.
See you. Right. Wow, guys. What a wealth of knowledge and information that we have just received on today. For everybody that hung in there, I know the average attention span of people is